up, everyone? Time to sit down and talk a little real estate again tonight. What we're going to talk about tonight is something that keeps coming up over and over again when I'm talking to buyers is financing. Okay, and real estate agents, even though we deal with financing a lot, financing is like a car. Okay, you have a Honda and you have a Toyota. You have a Toyota Corolla and a Honda Accord. They're both cars, but they come with different options. They look a little different. Even though they both will get you from point A to point B, it's just whatever you like. Your style, your flavor, what's important to you. So that's kind of like the way loans are with banks and different loan brokers and things like that. It just depends on your situation, is what's best for you and what fits your flavor or whatever. I'm gonna give you some gist of things that came up just today. We were talking about loans and the person kept talking about the credit score, which is very important when getting a credit card or any kind of loan. But you also, when you're thinking about a mortgage, your debt comes into play as well. You can have a 785 credit score, but if you got a lot of debt, it's going to be hard to get you done. Now, every bank, every institution have their own variables that they put in and how they calculate things to justify the risk of giving a person a mortgage. But just the basics of everything that's out there, the basics of it is they will calculate how much you have debt you have, and they're not really talking about you have to pay for your child's guitar lessons, or you got a super athlete, so you go get some quarterback lessons because you want them to be an SEC quarterback when they grow up. They're not really counting that stuff. You like to go get your nails done. Those type of bills are not calculated into your debt to income ratio. It's basically the things that show up on your credit report, like car notes, loans, credit cards, student loans, that type stuff. If you got some bad debt, something that has went to collection from back in the day, one financial institution told me that what they do is, say you got $3,000 worth of bad debt, they don't count $3,000 towards your monthly debt. They'll take 5% of it though, because I guess the expectations are that you will pay down that debt at 5% per month until it's paid off. I didn't get the why they use 5%. They just said they did. But anyway, they take all of your debt and they put it into this pile. So they'll say this person earns X number of dollars per month, and this is their debt per month. Now, how do they get your income? Your base income, your taxes, but also, if you got some bonuses and stuff that come in that are routine, if you got some money coming in from alimony, child support, and that type stuff, if you got enough coming in for a long enough period of time, it can be calculated. One person told me that if your alimony, if you're still getting alimony for 3 or more years into the future, they will count that as part of your income. But if it's about to end, within the next 18 months or so, then they won't count it as your income. So you won't be able to use it. That may not be the same for every bank. So don't just say Brooks said this and that's the gospel. Every institution is different. I talked to 2 or 3 different institutions preparing for this podcast, and it was a lot of different stuff. So I'm just giving you the basics, okay? So you get your income, and that's your regular income. You file taxes. They can pull that from your W-2. You can show them that you routinely get bonuses. They will count that towards your income. So let's say your income is, $6,000 a month. All right. So they will take a percentage of your income. All right. So if you got good credit, this is when your credit score will come back into it. If you have good credit, let's say they will take, you'll get a multiple of 45%. If you got poor or average credit. If you got great credit, you get 50%. If your credit just barely qualified for their loan, you may only get 35%. But whatever your credit score whatever factor your credit score allows you to have, they will multiply that percent by your income, and they get a overall, and whatever that number is, say they say 50%, and you make $6,000. So now they're saying that you have to have, they're going to operate on a $3,000 budget because that's 50% of 6,000. And so they start subtracting your debt that you owe from 3,000. And let's just say for the sake of this example that you have $1,200 a month in debt. So they did the subtraction, and now you have $1,800 left over. So now that what the bank will do at that point is they'll say, okay, this person has $1,800 of free money that could go toward a loan. So how much of a loan can they afford? And then they will determine your value. They may say that you can have a $200,000 loan. Well, your budget says you can't afford to pay that, because remember, they only going off of what's showing up on your credit report. You got daycare expenses that's out there. You have, you like to go get your nails done. You like to go out with the fellas on the weekend, and you guys ball out and drop a few $100s here and there doing this and that. So you can't afford that large of a note. So no matter what they loan you, you have to put it into your budget to see how much of that pre-qualification that you're actually going to use on a house. There's a lot of ins and outs. I can sit down one-on-one with you and discuss things, but the most important thing is to reach out to a financial person, your lender, your banker. Even before they run your credit, they can give you scenarios about how they will judge you and how they will assess your loan worthiness. So reach out to your institution. You can always contact me here at Praxis Realty at 228-627-0945. You can hit me on Facebook, on our Facebook page. It's Praxis Realty or Thomas Brooks Realty. On Instagram, you can email me at thomasbrooks@att.net. And any questions or anything, I'll get back with you with an answer, or I'll put you in contact with someone that can help you out. It's been a blast talking with you tonight. Contact me if you want to buy or sell a home. I'm here to help. I will walk you through the steps, every step of the way, until you get to closing. And then after closing, if the air conditioner break down, call me. I may know somebody that can hook you up on the cheap, get that thing running again for you after you buy a home with us. It's been great talking to you. See you next time.